guest, Sachin Shah, fund manager at Emkay Investment Managers, now joins in. Sachin, hi, good morning. Good to have you back. Good to have you back on the channel. What's your call on the market now? We've seen a big bull run without any kind of meaningful correction. Do you sense a correction round the corner, or would you say that now could be as good a time as any to buy?
No, actually the undertone has been extremely buoyant. We've seen this for last many months now, and one of the most important things is that if you see since the mid of May, particularly after the exit polls were out, the FII numbers have been very strong. The follow-up buying has been very strong. In fact, I was just looking at some data, and since the 10th of May or 11th of May, which is now almost 2 months, a little more than 2 months actually, FIIs have invested more than $10 billion, of which about $3.5 billion have come into Indian equities, and about close to $7 billion have come into the debt markets. So, led by this liquidity, the undertone has remained very buoyant. That's number one. Number two, if you see the global markets, they've also remained fairly strong in this period. So, since the period that I've been talking about, post-election or post the results or post the exit polls, I think the Indian equities is up close to about 12-13% in terms of Nifty, and if you say mid cap, they're up about 20-odd%. Equally, some of the global markets, like if you look at S&P 500, it's up 5-6%. If you look at Nasdaq, it's up 8%. If you look at Hong Kong, it's about 6-7% up. If you look at Brazil and Mexico, they all are up by 6-7%. So the undertone for the equities per se across the world has been fairly strong. So, and in India, we've had this very big event, which is after good 5-6 years, equity markets are now coming back into flavor, and so the asset allocators are really looking at equities in a very serious way, and they continue to keep on investing more and more as we keep on reading the data.
Okay, Sachin, hi. Good to see you in this morning. We just had HDFC Bank that came out with numbers. Its profits actually were just up 21% as opposed to, maybe a 23 to 30% range that they generally show in the profits. But the stock is still maintaining with a gain of around 0.7%. Is the possibility of a merger between HDFC and HDFC Bank the reason why the stock is managing to hold its head above the water?
Prima facie, from what I saw in the numbers, HDFC Bank, in terms of their advances growth, has been fairly decent at about 21% versus the industry at just about maybe 13, 14, 15%. So they continue to do very well as far as the advances growth is concerned. The only issue which I saw as far as in the P&L was the other income growth has been absolutely not there. So that is something what we need to divulge into more details and check, understand from the management, how do they perceive the other income growth as we go forward, because that is what has suppressed or depressed some bit of their earnings growth. Otherwise, their earnings growth could have been in the range of 25-30%. They have anyways delivered in the range of 20-odd%, but for the other income growth. Now, on the merger issue, what I personally feel is that there for the last many quarters there has been a hangover on the HDFC Bank stock price because of the merger issue with the HDFC Limited, and the biggest issue was that if HDFC was to be merged with HDFC Bank, and HDFC would not get concessions on the CRR, SLR once they convert all their advances and deposits into the bank. But with the new budget regulation, and clearly they are also allowed the housing loans as far as the infrastructure is concerned if they are below 50 lakhs, I think it's a very big positive move. And I think merger is not going to happen in a hurry. It will certainly happen at some point in time, but it's going to take its own sweet time, and probably in the next 3-4 years, by the time all these guidelines are very clear, and I think it's actually this CRR SLR concession which has happened for the housing loans under 50 lakhs, I think it's a big benefit for this merger. So actually, personally, way I look at it is actually it's a big positive, and the big issue which was earlier there as far as the merger is concerned is no more there. That hangover is actually off it. So I'm very positive on HDFC
So
Bank.
Sachin, when you say timeline, what is the timeline that you'd be working with?
It may take 3 years.
Okay.
It may take 3 years plus actually. So there is nothing to be worried at this point in time in any case. But with the CRR SLR concessions, eventually it should really take over the entire worry which was there before this.